Welcome to ETF Market Insights, a weekly show focusing on the evolving world of ETF investing. Each Friday, a new panel of thought leaders aims to provide investment education and insights, with the goal of helping you become an informed investor. Make sure to visit youtube.com/ETF Market Insights to watch previous episodes. And remember to hit subscribe so you receive a notification when we post new content and when we go live each Friday. Thank you for joining us today. Let's get started.
Welcome back to ETF Market Insights. I'm your host, Erin Allen with BMO ETFs, and today we're going to be discussing trends and flows in the ETF marketplace. So we often share this info to give our investors a gauge into terms of what other people are doing in the market. And I think it can also provide a really good general lens into what the overall market sentiment is as well. Before we do get started, a quick reminder that we're not providing you any investment advice or recommendations. Our channel is all about providing education around ETF investing. And with me today, I have Andrew Vachon, my colleague. He's Senior Product Manager with BMO Global Asset Management. Andrew and I have worked together for many years, and it's great to have him on the channel. He's going to walk us through a deep dive into what we've seen in the first half of this year and in the past month as well, in terms of ETF flow. So Andrew, welcome back to the channel.
Thank you, Erin. Appreciate the shout out there.
Good to have you. Let's get right into it and kick things off. I thought it would be good to start really broad and walk through sort of who is the most popular ETF provider that we've seen on a year-to-date basis and in the month of June, and what we're seeing really from an ETF provider trend perspective there.
Yeah, certainly. We've seen a lot of flows coming in this year. In fact, $33 billion have flowed into Canadian ETFs, which is the most we've seen out of the first half of any year here in Canada. Moreover, ETFs gathered $9.7 billion in June, which is big numbers for Canada. For those who like ETFs and like using them, this is very exciting. If we look at which companies gathered these flows, to no surprise, it's been the top ETF providers here in Canada. Approximately 8 of the 9.7 billion flows that went into the top 3 providers. iShares gathered about $1 billion, Vanguard just under $1 billion, and BMO had a great month with almost $6 billion in flows. Over $21 billion of the $33 billion that went into the top 3 providers. So that's big numbers. We're seeing some flows going into other companies outside of the top 3, TD, Global X, and Fidelity, but without a doubt, the top 3 providers have been iShares, Vanguard, and BMO this year.
Awesome. Yeah, we always talk about how when you're choosing an ETF provider, it's a good idea to look at some of those firms with larger AUM, those more established companies with great brand recognition and all that. What else should investors consider when they're choosing an ETF provider to partner with?
Yeah, that's a good question. It tends to come up a lot. When choosing an ETF provider, we think it's important to do due diligence and really look into the companies you're willing to do business with. There are numerous ways of doing this, such as going onto company websites to see if they actually have one. I'd say that's pretty important. We'd want to look at the assets under management of that particular company. Does the company have stability in the marketplace? And if they're recognized in the industry, do they have a relationship with major index providers, which is key whenever you're launching new ETFs, right? All kinds of questions you'd want to know. Does the current provider have scale to adapt to investor needs in today's evolving marketplace? How experienced is the firm at launching these particular ETFs, and what does the product shelf include? You want to have it tailored to you, but having that breadth and depth from a provider is good. Do they offer the broad-based smart beta, fixed income, innovative solutions? A diverse product shelf can show how much scalability the company may have, and I'd want to know if I were working with this particular firm, will I have access to certain information regarding any of these ETFs that I'm looking to purchase, such as fun facts and how transparent the company is. Do they offer resources to better understand these products, right? The list goes on and on. I mean, even things like that you don't necessarily think about whenever you're looking at an ETF such as tax season. Does the provider provide important tax numbers and distributions, stuff of that nature?
Okay, good tips there. Let's get into flows a little bit more here. First, I need to give a shout out to National Bank ETF research team, because they put out a great report that we leverage all the time in our industry. So all of the charts you're going to see today are from them. But walk us through this first one, Andrew, in terms of flows last month in June. As you can see, there's a lot of BMO representation, which is nice, but walk us through what we saw there.
Yeah, sure. Fixed income ETFs saw about 6.8 billion in flows for June. This is across a number of fixed income categories. It was definitely the largest monthly flow this asset class has ever seen. The biggest was ZAG, which is BMO's aggregate bond index, followed by the money market ETF series ZMMK, the BMO corporate short corporate bond index ETF, ZCS, and the mid corporate bond index ETF, ZCM. So approximately 13 of the top 20 ETFs this month ended up being BMO flows, followed by iShares, Vanguard, Global X, and Fidelity there.
You mentioned that the big theme from an asset class perspective last month was fixed income. Can you walk us through a little bit more in terms of what we've seen from an asset class perspective on a year-to-date and 1 month basis?
Absolutely. It looks like we're starting to see a broadening out in different asset classes, right? It's no secret that rate cuts are on the table with the central banks in North America and globally for that matter. With that, certain sectors such as utilities, financials, REITs, and technology have done well in terms of flows and could be poised to do well going forward as well. So it's no surprise that we're starting to see massive flows into equities for the first half of 2024. We saw 20 billion going into equity ETFs, but for fixed income, we've seen 12 billion in flows this year. We did see a large institutional switch trade from an ESG in Japan ETF offered by BMO into their fixed income lineup. But outside of that switch trade, though, investors' demand for fixed income was very strong. The reasoning could be either the anticipation of central banks starting to get ready to lower rates, as I mentioned, investors taking profits, rebalancing their portfolios, looking at a place to park cash in anticipation of a market correction, or even due to high valuations in the equity sectors that they might be looking at. And also, fixed income is paying out attractive yields still, right? And overall, the largest inflows for the first half of the year were in corporate bonds, followed by aggregate foreign bonds and money market listed there.
Yeah, we're still sort of seeing that cash trade continue. It doesn't seem to have an end in sight, though. Maybe it's slowing down a little bit.
Absolutely.
Let's dive a little bit further into equities. I want to talk about what we've seen in terms of geographic flows and also in terms of categories or exposure types. What trends are you seeing there?
Yeah, for the first half of the year, we've seen the market glamored by the stars and the stripes. Approximately 6 billion of equity flows went into the S&P 500 ETFs. With strong performance from the S&P 500 and its flows, these S&P 500 ETFs have become some of the biggest in Canada. Of course, we may already know that the S&P 500 remains one of the most efficient indices in the world and a key portfolio building block for investors. And if this is something that one hasn't already considered for their portfolio, I would look to BMO's ZSP or Vanguard's VFE or iShares XUS to name a few. Global ETFs took in approximately 4 billion, with the majority going to asset allocation ETFs. Broad developed markets with almost 3 billion listed there, with the bulk of those going into BMO's MSCI EFI index ETFs, ZEA. And Canada saw some healthy flows as well. 2.5 billion going into the TSX Cap Composite Index ETFs, such as BMO's ZCN and iShares XIC there. So those took the majority of the Canadian flows last month and for the first half of the year. Yeah,
definitely a U.S. theme there with the Mag 7 really showing no end in sight in terms of driving that S&P 500 index forward. BMO does have the largest S&P 500 ETF in Canada with ZSP too. So something to consider. What about in terms of categories, Andrew, or exposure type? What trends are we seeing there?
Yeah, we've just seen a large institutional redemption from ESG, ESGY, which is the BMO MSCI US ESG Leaders Index ETF of approximately 1.9 billion. Again, this is part of an institutional switch. So that went into other BMO fixed income ETFs. So we're starting to see ESG ETF flows into negative category this year because of that. And new listings slowed down just a little bit. ESG ETFs have approximately 8 ESG ETFs that were delisted this year in Canada, which I'd argue is normal part of the cycle. Many companies were launching ESG ETFs, and not every single company is going to get the bulk of the flows, right? There was recently an enacted Bill C-59 in Canada that may have some positive lasting effects on ESG investing, potentially incentivizing clean energy and technology over the long term by lowering cost of renewable energy for the end consumer, which would then help accelerate the adaptation of clean energy by increasing demand projects. But anti-greenwashing provisions could result in some headwinds due to a retrenchment around ESG disclosures affecting some global gross revenues with this bill. However, ESG ETFs, the AUM is approximately 12 billion, which is still very big for Canada. Now, looking over at the cap-weighted ETFs, such as the S&P 500, for instance, cap-weighted ETFs took the largest flows among equities, which may come as no surprise. Cap-weighted ETFs remain the most popular out of the methodologies that are available in the marketplace, and cap-weighted ETFs have seen about 13 billion in flows for the first half of this year, and 2.5 billion for the month of June. Overall, cap-weighted equity ETFs have about 166 billion in Canada. So it's just absolutely huge.
Yeah, that's very interesting. Sticking with equities, let's talk through what we're seeing in terms of a sector trend. Of course, technology was bigger at the beginning of the year. Have we seen that trend continue, or what do you see there?
Yeah, I mean, with the anticipation of rate cuts throughout Canada and the US, we're starting to see the market price in those rate sensitive sectors, right? The earliest of those sectors was the tech sector where investors found comfort in investing in some of the largest companies in the world. The Mag 7 have fairly balanced and stable balance sheets, low financial leverage, high return on equity, stuff like that. The cost of borrowing being high affects research and development regardless, and can affect innovation. So the dangling carrot of rates decreasing seems to have led to the market to move in before it's too late. Having said that, it's not just the tech sector, obviously, that's been positive, has been affected positively by the potential rate cuts that are coming. We're starting to see flows into rate sensitive sectors such as utilities. The building of infrastructure for the sector is important and requires a lot of capital. Financials, the relief of potential defaults and potential decrease in loan loss provisions has got investors excited. Real estate, of course, the potential increase in flows to this sector due to lower borrowing costs, for rental units, for instance. So as a result, for the first half of this year, we've seen 270 million in flows for tech, 211 million in financials, 242 million in utilities, and 111 in real estate. And once we start to see these cuts, we'll most likely see more flows into these rate sensitive areas. And overall, we expect to see more of a broadening out of flows going into like mid caps and small caps as well, since these investments are directly affected by rates. Something like a ZMID, which is the BMO S&P US Mid Cap Index, or the ZSML, which is the BMO S&P US Small Cap Index ETF, might be something to pay attention to. These two ETFs, along with the Russell 2000, already started moving quite a bit in the most recent weeks. So especially after we got the CPI print from Canada and the US, the market has priced in a June rate cut with the BOC well into the 90s and 100%. We checked a few days ago from the Fed for September. after a dovish tone from Powell earlier this week. So we'll see what happens there. So it's definitely another area that's really exciting for investors to pay attention to.
Awesome. And I think that's a good overview of Canada, but I often like to look south of the border at the US flows. A lot of the times we see some of the trends there show up in Canada, months or maybe sometimes years later, but it's a good precursor to what we can expect in Canada a lot of times. So walk us through just high level what we saw in the US.
Yeah, absolutely. There's such amazing innovation coming out of the US, and it's hard for other countries to ignore and not follow suit. Recently, the multi-asset category, for instance, has been growing quite a bit. Within the multi-asset category, we have covered call ETFs, put and call right ETFs, which are available here in Canada. And Canada was certainly one of the innovators there. However, we have seen some popularity recently in equity buffer ETFs, such as the First Trust Vest Laddered Buffer ETF, BUFR, available in the States. These types of ETFs are really starting to stand out and recently reached $47 billion in AUM in the States. And it's only getting started as investors become more aware of these options that are available to them. These strategies appeal to the ever popular investors such as retirees who are looking for more protection on the downside than perhaps a lower volatility strategy might offer. And First Trust they launched a few of these in Canada a few years back, but now we're starting to see companies like BMO providing these ETFs as well. BMO this year just recently launched their full suite of buffer ETFs, and for those who are seeking equity exposure for some capital protection, investors who are approaching retirement or already in retirement, these ETFs can be a powerful tool for those looking for that shock absorber, if you will, to the portfolio while maintaining some potential upside.
Yeah, I think there's always sort of an educational process that has to take place in Canada, and we're seeing that with buffers now as we've launched them this year, and I think in the coming years we'll really start to take those, see those pick up as investors become more comfortable with them. But for sure, in these times of market uncertainty, having that buffer on the downside can give some peace of mind. Awesome.
Absolutely.
Thank you so much, Andrew. That was awesome perspective in terms of Canada and US flows. I appreciate you joining us and hope you'll come back soon. To our viewers, if you did enjoy today's video, comment below if you like the topic. It's something that I'd like to do more frequently. We haven't done it in a while, but maybe we can have Andrew back on a quarterly basis or something to walk us through this. But thanks again.
I'd be happy to.
Next week on ETF Market Insights, we're going to walk through an overview of a few of our new tools. I've been talking at length about these. It seems like every episode about the new free tools available on BMOETFs.com. But next week, we're going to do a demo. We're not going to get through all 8, so it'll probably be 2 parts. But we'll show you some ways that these can be powerful tools that you can use in your portfolio construction. So thanks for joining us today. We'll see you next week. Bye for now.
Thank you for watching this week's episode of ETF Market Insights. To stream any previous episode of ETF Market Insights series, please visit youtube.com/ETF Market Insights. Remember to hit subscribe and sign up for alerts so you know when we post new content. Also, we invite you to visit our accompanying website for ETF tools, education, and much more at etfmarketinsights.com. Once again, thank you for watching. The session provided is for information purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or recommendation to buy or sell. Particular investments and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to any circumstance.